Well, the stock of the day is Jet Airways. It's down close to about 7.5%. So let's kickstart our movers and shakers with Jet Airways and the big CNBC TV 18 exclusive. Lata, the letter written by Etihad to State Bank of India?
Well, the key content of the letter or the key point made by the letter is that Etihad is willing to bring in additional equity, but the price of a jet share shall not be the ruling price or the SEBI formula of 6-month average of the 6-month high-low, but it shall be at 150 rupees. They believe that the current market price are unrealistic and volatile. Now, for this, they say that they will require SEBI exemption. They say that they have had preliminary discussions with SEBI on the matter, which have been positive, but they want SBI to carry the conversation and also get the Civil Aviation Ministry's approval. And the word they use is pretty strong, that they will not, without this approval, we are not willing to invest a single penny further. So that's quite clearly one of their key demands. Then the letter goes on to say that among the other conditions it wants is that Naresh Goyal and his family, their stake should be brought down to 22%. They should not have any ability to speak on behalf of Jet, even if there is an advisory role or a chairman emeritus role that Naresh Goyal is given. That role should be clearly defined, that advisory capacity, and they should not be allowed to speak for the company or act on behalf of the company. That they can get a maximum of 2 seats. Actually, what they say in the end, what the Etihad letter says in the end, is that they would like a professionally managed board, a professional board with Jet, that is Naresh Goyal's family, and the lenders together having 2 seats. You know, the lenders like SBI want to convert a part of their debt into equity so as to reduce the liabilities of the company, and therefore they will also be entitled to a seat. So together it should be 2 seats. Etihad is aware that their own rights are restricted by Indian law. They can't hold more than 49%. So accordingly, their representation on the board will be restricted. They can't do creeping acquisition beyond that level. So they are aware that they are restricted to that point, and therefore Naresh Goyal should also be restricted. Again, when debt is converted into equity, it shall not be the non-bank loans. That is, Naresh Goyal's loans to the company cannot be converted. On the contrary, they should be asked to take a moratorium. That is, no interest will be paid on their loans for some time. So these are the conditions on which Etihad is willing to participate. The letter also starts with a fairly grim description of the situation in which Jet is now, that lessors may ground the aircraft unless immediate money is given. Etihad is willing to put immediate money of $35 million, provided all its conditions are met.
All right, Lata, thanks so much for that. The stock has moved for the low point of the day. Keep an eye out on the Jet future stock as well. There's a 20 rupee difference out there. It's trading at around 252. The cash market price, remember, is at around 272. We should get the futures plate as well up for you. But Ritu as well has been tracking this story for the last couple of days. Ritu, fill us in.
Well, you know, what Lata was telling is what the Etihad Airways wants in this entire deal. But what do the lenders really want? We understand a draft resolution plan has been floated, which the lenders had agreed upon with the management of Jet. But of course, Etihad has its own conditions. But as per the draft resolution plan, a part of that 8,200 crore rupee debt is to be converted into equity. We're not sure at this point of time how much of the debt will really be converted. A lot of it also depends on finally what comes out of the forensic audit that EY is conducting. Further, we understand that the draft resolution plan says that Goyal and his family will be allowed to nominate 2 members on the board of Jet Airways, and one of them could be his son Nivan Goyal. Of course, now we know that Etihad is opposed to Naresh Goyal having any say at all. But one thing is clear, the lenders also want Naresh Goyal not to be in control of the airline anymore. That is, they do not want him to continue as a promoter of Jet Airways. And after the restructuring is completed, where the promoters and Etihad bring in fresh funds, lenders convert part of the debt into equity, Goyal's own stake will fall to about 22 to 25%. Etihad expects it below 22%, as Lata was pointing out. Further, we understand that as per the draft resolution plan that has been floated, the voting rights of Naresh Goyal's family will be capped at 10%, making it very clear that they will have no big say in the management of Jet Airways going forward. So largely, these are the contours that have been stipulated in the draft resolution plans. But we know that Etihad's ask is very, very different. But a consensus will have to be reached, and therefore today's lenders meeting will be very crucial.
Yes, absolutely. Ritu, we'll keep coming back to you for updates on as and when the lenders meet starts. I think it's expected to start, what, at 2 o'clock? Thanks so much for that. Nigel, graphite up 10%, HEG up 7%. Is there some industry news?
Yeah, that's what, but you need to look at both those two stocks as well and from the highs that they've come off. So Graphite India's recent high was around 1,100 rupees. That had come down to around 700 rupees. So it did see a sharp correction. And HEG as well, that was trading closer towards 4,950 in October 2018. Now that as well has corrected more than 20% from the top. What's the news really? Now reports have indicated that Tokai Carbon, they have raised the graphite electrode prices for the first half of this year. So that's come as good news. Remember, the price increase didn't happen yesterday or day before. It was actually increased in the first week of January. But now, in fact, these reports are coming out, and that's why both these two stocks are surging higher. Now, if you're looking at the numbers and what prices Tokai, that's the Japanese producer, has fixed prices at, we should get the graph up for you. Yeah, that's what we're talking about. For the next 6 months, they are fixed at around $14,700. Now, in the previous half, that's from July to December, it was fixed at around $11,100 odd. So it's an increase of more than $3,000 on if you compare this half with the previous half. And on a year-on-year basis, if you're comparing both the halves, then it's an increase of around $1,500. On the back of that, the street is hoping that maybe Graphite India as well as HEG, they'll be able to hang on to prices and there will not be any, big deterioration in pricing. And that was really the fear. And that's why we did see that these, the stock prices had crashed. Why is Tokai Carbon so important? They used to hold roughly around 10% of the global graphite electrodes. Now that's gone up to around 14% because they did do some acquisitions. And, it's fairly important, Rima. But you need to keep in mind that these price increases are because of demand-supply dynamics. The second factor is that needle coke prices as well have moved up. So if the price increase is enough to offset that, they can at least hold on to margins, or we'll not see any big margin deterioration. Conflicting views, though, coming out from the international circuit, because Tokai is talking about prices being stable. I was going through their report, their annual report that they put out. While you have steel producers are saying, no, prices will come down. So conflicting reports coming in from both those two sides. For today, both these two stocks are higher in today's trading session. But tell us about KPIT, Rima. The numbers didn't look good. The stock opened up with a cut of around 7%. It's recovered from the low point of the day, though.
Absolutely. We'll come to why the stock is recovered because there were some positive management comments which came through. But first, a quick run through of the numbers. Disappointing numbers, a top-down miss. The company's reported a negative constant currency growth of 1.7%. The street was expecting about 1.5% growth. Even in dollar terms, the revenue has declined by 2.5%. Now, the KPIT business is two parts, the IT services and the engineering business. The IT service business momentum was quite weak. The revenues actually came down and it was impacted on account of lower billing days as well as completion of large projects which took place in the prior quarter. The engineering business, which is eventually going to get demerged and listed separately on the exchanges, that had fairly good momentum with a revenue increase of about 5% on a quarter-on-quarter basis. Now, despite the miss in Q3, the company continues to hold on to its full-year revenue and margin guidance. So revenues will be about 8 to 10%, and even on the margin front, it should be more than 12.5%. Now, the other important update which has come through is that the NCLT has given its approval for the merger of Birlasoft with KPIT Technology. From the merged entity, the engineering piece will get carved out and listed separately. So on the exchanges, you will have Birlasoft, which will house the IT business. That will be trading on the 24th of January. And KPIT Technology, that name, will have the engineering business, and that should get listed both on BSE and NSE by March of 2019. Now, the reason why the stock has recovered quite a bit was because the management said that the engineering business has seen a growth of 30% in the past. It should at least see 20 to 25% going ahead. Even on the IT business, which was quite weak in this quarter, the company has said that Birlasoft, which is going to get merged, which houses the IT, which also adds to the IT business, that has seen a growth of about 15%. So IT as well should continue to see growth going ahead. Let's hear out the management.
We'll continue to grow, in a reasonable space. While we have grown 30%, we expect the growth to be more than 20-25%. That's what we have said over the next few years. So that growth momentum in engineering will continue to be there. On the margin front, we will see uptake in a quarter or two from there. And so I think the growth trajectory in engineering is going to be there, plus the margins will improve. we will see growth in IT next quarter. The other thing I wanted to say is now, when the next quarter will come on the IT business side, it will be KPIT business plus Birlasoft business. And the Birlasoft has roughly has been growing about 15% year on year. So with KPIT business growing as well as some traction there, I think we will see positive traction on the IT side as well.
Well, another stock that we're looking at is Indiabulls Integrated Services. Now, Yash Jain has been bringing us all those exclusives. And now, just a few minutes ago as well, I read a flash that had confirmed, all of that. Yash, good on you, mate. And tell us, fill us in terms of Indiabulls Integrated Services.
Well, thank you so much for that, Nigel. Now, Indiabulls Integrated Services is the stock in focus. Of course, the stock right now is locked in upper circuit, and that is primarily on the news which the company has informed the exchanges. That is the receiving R1 or the first level approval when it comes to the life insurance business of Indiabulls Integrated Services. Now, of course, we had reported the same development after the IRDA board meeting which took place last month, and now the company is just informed the same piece of development to the exchanges. Now, that is one part of the positive development, but also what the company goes on to say is that they've started putting in place all the systems and the process to file for the second level approval out of 3 approvals required by any company to start the business. In terms of the information which we are receiving from our sources, the company is likely to put up the proposal for second level approval in the February board meeting. That is as far as the life insurance business is concerned, but also incrementally, the company is also likely to file the papers for the general insurance business in the February board meeting. The company has already raised 1,200 crore, out of which 700 crore is likely to be reserved for further funding in the life insurance business, and the balance 500 crore is likely to be kept for the general insurance business.
Okay, thank you very much for that. Moving on, Specialty Restaurants is also locked in an upper circuit on the back of a stellar Q3 numbers. We spoke with Anjan Chatterjee, the CMD of the company, to know more about the quarter gone by. Hear him out.
Delivery has been 50%, almost 48% jump on deliveries. We got a vertical of deliveries. The wet-led ones will be having around a percentage of around, I think, 18%. 14 to 18%, which is growing. In the next year, we're going to be pressing the button to look at opportunities to scale up Hoppy Pola and also add another brand to the vertical of wet-led. So they are going to be parallel verticals, so you can't ignore the millennial today. So you will have to go balance-wise. And I think that these are the two things which the son hopefully will be leading, the young team, and the father continues to sell made in China Chinese.
Well, and we also have the MD and CEO of Syndicate Bank who said that 14 to 16% of their NPAs are from the exposure to the Mudra scheme.
We have made the normal provisioning wherever the accounts are not paying as per the term. We are making the regular provisioning, and the NPA is in the same zone as MSME, which is between 14 to 16%. So we have made first year provisioning, which is 15%, but we have not seen any kind of excess NPA trends as yet.
Okay, 14 to 16% NPAs in their Mudra loans, and yet the company is saying no alarm bells right now. Moving on, MCX saw healthy growth in the trading activity fueled by a sharp rise in energy trades and strong bullion activity. Here is Mrugang Paranspe, the MD and CEO, on the outlook going ahead.
Last quarter, both crude and gold did specifically quite good for us. Crude was up more than 20%. Gold also was up pretty good, in double digits. Gold has got a lot of sentimental value for MCX. We've been with that contract for a long time. It's a flagship contract, and the impact that we saw post demonetization is definitely now coming off. And I think that's the most encouraging sign we took from last quarter's numbers, that gold seems to be coming back in terms of its volumes. Of course, crude was a great contributor, and I think these two will continue to be the contributors for the fourth quarter numbers as well. In terms of the next quarter, I think there are a couple of things which we are expecting. One, in terms of our product portfolio, we want to expand in both the energy and the non-ferrous space, and the ferrous space where we are looking to increase at least one contract each in the next quarter. I think in terms of a completely new product, I think we are very hopeful that index trading will come in definitely in the next quarter.
Okay, all right. Here's a quick recap of all the top buzzing stocks we covered. We have Jet Airways, HEG, Graphite India, KPIT, Specialty Restaurants, Syndicate Bank, and finally, India Bulls Integrated Services.